Good morning, everybody. It is 8:45 a.m., September 29th, 2023. It is Friday, and I think a lot of you will feel the same as me, which is this has been a very long and interesting week. It's honestly, we're closing out the week of September. I think it's been the longest week of September so far, in terms of at least how it's felt. We've got a lot of stuff to talk about this morning. Thank you all for joining me. A couple things I want to highlight that we're going to go through, and then we will get into everything. First, we have an update on the NHS deal with Palantir. It is indeed delayed, and I'll be giving you all the details for why it's delayed, how it got to be delayed, and what the future is going to be for that Palantir NHS contract. Second of all, we got core PCE. The reason you are seeing the markets tick a little bit higher, Palantir right now $16.07 in the pre-market, the S&P 500 $430 in the pre-market, which is absolutely incredible given on Monday or Tuesday we were at 422. We were $2 away from testing the 200-day moving average. We are back at the 430s, and really this happened yesterday when we saw a really unique spike in terms of the markets, because I think a lot of people were just like, you know what, we're oversold and we're buying equity. So we'll talk more about that. We have some comments on Nike's earnings and the state of the consumer, their big beat on EPS, and basically slight miss on revenue, but essentially revenue came in well. And we also have to talk about some things from Coinbase CEO Brian Armstrong and Bill Ackman, and his thoughts on Google, Netflix, and the state of interest rates and the economy going forward. So we got a lot to discuss. Thank you all for joining me. Cameron Investing, Sasky Rose, Miami Ren, Primal Plaza, Joseph, Roy, Jagger Flo, Danny, Brian C, Sethi Roth, Stefan, Mike Rose, Marvin, Don Juan, Markets Investing, Tessa Best. Good morning to all of you. Jew Jr. Andrej. He says, hello, I hope for the NHS contract, but sadly no winner has been picked. Not yet, but we do have some updates that I think will lead us to see if it's going to be given to Palantir. Davis, Garcia, Jeff, Jeremy, David, thank you all. Futbucker, Max Deuce, thank you all for being here. All right, it's time. Peter says, yo, Amit in caps. Yo, Peter, we got some stuff to talk about. Here we go. Let's start off with the first update of the day, which is this NHS deal. So we do have an update. The NHS deal has been delayed, and here's the official source. It's not from the NHS. It's an article publication in the UK that I would tend to trust, given their history of reporting stuff in the UK. So it seems pretty legit. This launched just a couple of minutes ago. NHS has launched. So first of all, the contract for England's controversial health data platform is delayed. And then they launched a £2 million project to engage patients with data strategy. I'm going to talk about that. That's also very interesting. Let me actually go to the Twitter version of this, because the article version, it's a little hard to read. Let's share my Twitter. Here you go. Okay. So as you can see here, the contract award for the $588 million NHS Federated Data Platform, a huge analytics project for one of the world's largest healthcare providers, which is why it's such a big deal if Palantir gets this, has been delayed by a few weeks. And, this is the government. This is what they tend to do. They tend to delay stuff. So no surprise that it's delayed. The wait times in the NHS for patients are, astronomical. So why wouldn't the wait time for investors also be astronomical? When the competition was formally launched in January, official documents suggested keen bidders, controversial spy tech firm Palantir, has said the deal is a must-win. We would know the outcome of the deal by September 28th. NHS England officials have now delayed the announcement of the winning bidder until mid-October. So until mid-October, we are not going to know who got the answer. The start of the competition was also delayed. Earlier supplier engagement over the FDP, which will follow from the NHS's COVID data platforms run by Palantir, began in April of 2022. With the price pegged at a first maximum $294 million. The official notice estimated the formal competition of the contract would begin in June, but it was delayed by 6 months. So the contract process, the tender bid, got delayed just as much as the announcement is getting delayed. The price of the project was then increased to $360 million and then to £480 million, which is $588 million. Critics have argued that the procurement process favors Palantir, which has courted controversy by servicing security and immigration enforcement contracts for the U.S. government. The company, founded by Trump backer Peter Thiel, there you go, you got to get that in, has already become deeply involved in the NHS data strategy by winning a $1 contract without competition in the early stages of the pandemic. It went on to win multiple $1 million contracts and then $23 million contract, and then it just goes until the extensions that Palantir was able to win. So we are not going to know for some time about ultimately who and if this deal happens. One more thing I want to show, some prepared statements, and then we'll do some analysis on this. In a prepared statement, NHS Chief Data and Analytics Officer Ming Tang said it's so important that the public are involved and able to inform and have confidence in what we're able to do to improve the NHS's use of data to help save more lives. These events are all about building that confidence and ensuring the public can have a key voice in shaping the way our vital programs use data to improve patient care. In August, the legal guardian of the NHS data raised concerns about the planned use of patient data on the FDP. And the National Data Guardian Dr. Nicole Bryan warned that if any data program, here this is really interesting, does not have a strong enough voice in the public discourse and there is a lack of trust, it creates a knowledge gap. She's quoted, and in this gap, alternative narratives can take hold, becoming a breeding ground for speculation, misinformation, and discontent. Where the discontent is not engaged with, it quickly grows into ground walls of opposition, yada, 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 essentially saying, look, it's going to become a lot more difficult for us to get trust and for Palantir or any competitor to win this deal if the public doesn't trust in it. This is actually a concern that Mariana had from Bank of America. She's one of the analysts that has an $18 price target on Palantir. And her biggest concern was, look, at the end of the day, as long as the patients, if the patients in the NHS, which is, the average citizen in the UK, does not trust their data being affiliated with the FDP, then they're simply not going to give up their data. They're not going to give a mutual consent form for their data to be used by the FDP. And the FDP, the Federated Data Platform, is useless unless it has data, right? Which is kind of the corresponding thesis around Palantir being a picks and shovels tool. They don't make data, they take your data and they make it more effective. Now, what I found very interesting about this, if you're just joining me, the NHS deal has been delayed until mid-October. We will know, hopefully around mid-October, if Palantir or any other suite of companies got the deal. The barest case for Palantir not getting this deal based on this announcement is, look, Palantir didn't get the deal. It's too controversial, and the NHS is trying to figure out how to announce a different company or trying to find a different company by mid-October. I think that's one point of analysis. I do think that's a little bit more of an elementary form of analysis. It doesn't seem to be all that inclusive of what's going on here. I think there's a couple of corresponding events that are interesting to talk about around what's going on with Palantir. Number one, Foxglove quit social media yesterday. If you don't know what Foxglove is, they're a media organization that was really trashing Palantir over the past 2 years about this NHS contract. They decided to quit social media yesterday. That was really interesting. So one of the biggest competitors to Palantir's deal steps away. Okay, you got that going on for you. Number two, notice what was the headline on this deal. The NHS, in addition to delaying the contract, has also announced a £2 million project to engage patients with data strategy. What I believe this means from the NHS is, and so here's my theory for why the bull case. I gave the bear case for why Palantir didn't get the deal. Here's the bull case for why they got the deal, even with this delay. The concern from activists and Foxglove and all these people in the UK is that patient data will be misconstrued and patients won't opt to give their data because they won't know what's being done with their data. Well, what if you just educate patients on what's being done with their data? So, what if you actually set up a campaign where you're going to patients and you're informing them, hey, this is what the Federated Data Platform does. This is how more efficient the platform will make the entire country. This is why it's really important to sign up. This is why blah, 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 blah. And the reason I think they're doing that is because if there is such a concern in the general public around their data being implemented within the NHS, my belief, where does that concern come from? That concern comes from big, evil, spy tech, Trump-backed company Palantir is going to steal our data. My theory is you're probably launching this campaign because Palantir got the deal and you just want to educate consumers on why they should be giving their data to Palantir. That's where I'm coming from on this. So again, if you're just joining, the contract has been delayed till mid-October in terms of the announcement. And they have launched a simultaneous £2 million contract. I don't know what organization is getting that contract, or maybe they're just committing £2 million to engaging with consumers to educate patients in the UK about why they should opt to give their data into the Federated Data Platform. I think if the concern is that Palantir is going to deter people from opting in their data, this $2 million essentially advertising campaign is just a way to get people ready for Palantir to be announced in mid-October. Essentially, my thesis is they needed some more time to educate enough people about why it was going to go to Palantir, and that's what they're going to do over the next couple months. Maybe that's the case. Maybe that's not the case. That is kind of my thesis on how I see this playing out. If you looked at the stock price on Palantir, I know the macro is moving, but you might have imagined we got this deal $16.04, up 1.74% in the pre-markets. We do not have a deal from the NHS officially. We did get $60.9 million yesterday from the NIH in the United States, but we do have confirmation that the deal will be announced in mid-October, and the simultaneous advertising campaign around engaging with consumers and the general UK public around patient data, to me, signals Palantir did get the deal. It's just a question of now when it will be announced and how they're going to educate people around getting the deal. The final the final point here is it's just inefficient bureaucracy, government. I mean, there's so many times a deal is supposed to be announced, it's not announced, and that's just not in the UK. That's everywhere across the world, right? In the United States all the time. So maybe the government's just like, honestly, just they just need more time. And look, it's understandable. It happens. It's how governments work. So that could be one thing going on as well. Carl says, admit you're spot on. Was thinking that Foxglove has set up a petition for Palantir not to get the deal here in the United Kingdom. No one over here knows whether data is being used. Yeah, I mean, look, at the end of the day, I think Foxglove has spread a lot of propaganda around what's going on with Palantir, and the fact that they're quitting social media. I did a video on that yesterday, and they're quitting for the most unique reasons, I would argue, is a testament to the fact that they don't want to keep going with this. There are reports that George Soros, which has funded Foxglove and other media organizations, is cutting off funding for a variety of I guess companies that he funds or ideas that he wants to get out into the world through his like nonprofit open democracy conglomerate of media organizations. So that may be a reason why they're also quitting social media, because they don't have the funding to do it anymore. But if you are truly an activist organization that here's the funny thing about this. Everyone who's saying, well, George Soros cut off their funding and that's why they're leaving. If you're a real activist organization, you actually care about getting a message out there to stop big, bad, evil tech companies from exploiting your data, you're going to let a decrease in funding stop you from tweeting things that go against your, that go for your cause. Meaning, my point is, it costs pennies to tweet things. Tweeting is not expensive. So the idea that you lose your funding, I don't know how much funding it would be, it means the inverse of this is actually true. It means that the only reason you were tweeting in the first place about Palantir and this big, bad, evil tech company and getting people to believe that it was horrible is because you were funded. And so the lack of funding to me is not a reason that they're leaving social media. It's the funding was the direct correlatory reason for why they were even on social media. And if they don't have any money coming in the system by Soros, then there's no point for them to go against Palantir, because they never actually cared about Palantir. It was all around for money and exploitation, whatever else they cared about. So that's the kind of sad thing about that. And going on that point, and then we'll move on to some more macro stuff in PCE. This is what happened yesterday. I don't know if a lot of people got a chance to see this. If you just take a look at this right here, what you see on my screen are thousands of bot accounts tweeting in parallel the exact same message to the NHS's Amanda Pritchard. So the actual message is, hi, Amanda Pritchard, the government's plan for an NHS federated data platform likely to be run by Palantir is damaging trust between patients and the NHS. Please take action to pause the tendering process and urge the government to rethink. We need proper patient consultation and consent. And as you can see, the video keeps playing. This was tweeted by Chad. We have thousands of these exact same messages. And it's pretty insane that there was a conducted bot account or conducted fleet of bots going at the NHS. It seems like this was like a last-ditch effort by Foxglove before all their funding dried up to try to stop Palantir. And the really funny thing about this is that these same people are the ones that are complaining about data exploitation. When you create a ton of bot accounts, you are literally exploiting data. You're literally manipulating and spamming a platform. Their reasoning for leaving Twitter was that there's too much spam and it's being degraded. It's like, you can't make this stuff up. I mean, like, you just honestly, we feel like we're in a movie and we're just like trying to fight back. You cannot make this stuff up. Alice says, what in the world? Alice, that's what I thought yesterday. That's what I thought yesterday. I mean, like, look, I'm not part of Palantir. I'm not part of the NHS, and none of us in the chat are. We're all just kind of like watching this and observing this, and we're trying to understand it as investors because we're trying to make some fucking money here, right? Like, that's kind of what we care about. But it kind of feels like it's this thrilling drama that we're in, and you didn't think you would get this type of thrilling drama unless you were invested in a company like Tesla, because Elon is the epicenter of the universe and everything flows through him. And like, the Tesla shareholders and the Tesla journalists are used to that stuff. And Palantir, I mean, it's a B2B software enterprise company. It's not supposed to be that crazy, but it's kind of crazy. And this is also my, my back of the foil kind of subconscious theory for why I think Palantir is going to be one of the biggest companies in the world, because you don't have a company that goes through this much controversy. Like, the biggest companies in the world, Amazon, Google, Facebook, Tesla, they all went through a lot. I think Nvidia is probably the only company that hasn't went through controversy. But outside of that, every tech company that's become really big, whether we like it or not, and this is stupid, this is not intellectual at all, they all went through a lot of, crazy shit to get there, and controversy. And, maybe that controversy is the reason for why you're doing something important in the world. So that's what we got for Palantir. All right, let's move on to the PCE reports that we got today. PCE actually came in not bad. It didn't come in that much lower, but it didn't rise that much higher. And let's go from here. Joe says, can Palantir sue Foxglove for slander? It wouldn't be worth it because the British media would act as if, they're trying to sue a small little, this is a $30 billion company suing like a I don't know, a $5 million nonprofit. So it just wouldn't be worth it from a press perspective. All right. So here's the PCE results you need to know. So PCE core deflator month over month was 1% or 0.1% in August. Last month in July, it was 0.2%, and we estimated it would stay the same 0.2%. So we actually got a decrease in the month-to-month core PCE, which is why stocks are up right now. That is, I think, the core reason for why we're seeing some momentum. Palantir at 1609 in the pre-markets, and the S&P 500 in the pre-markets at 431.61. Absolutely phenomenal gain by the S&P 500. US PCE core deflator year over year, 3.9%. We estimated 3.9%. The previous was 4.3%. So this is the best PCE month over month, or sorry, year over year results we have gotten since September 2021. Since September 2021, this is the best result we have gotten on core PC. That's another reason why you're seeing markets do a lot better right now in the pre-markets. August was 0.4%, estimated 0.5, previous 0.2, so we came in below on that as well. And then this is not core, this is just regular PCE. So PCE core is down, PCE core month over month is down, PCE core year over year is down, PCE regular August month over month 0.4 versus 0.5 is down, and August 3.5 is also down PCE, not just core, but regular PCE. Overall, it's down. And that is a really, really good thing for markets because at the end of the day, we need to see core PCE coming down in order for things to start getting better. CPI is okay. CPI is not, CPI is one of those headline things. It obviously makes the headlines and people care about it. But what the market really cares about is the core PCE. Because that lets you know when you exclude the more volatile things, what's actually going on in the economy and how bad is it actually getting. Now, one thing that's really important to remember about this, and then we'll get some more updates on what's going on with inflation, is if the federal government shuts down in the next 3 days, we are not going to get a ton of data from the agencies that provide all of the data to be able to see inflation and PCE and jobs reports and all that stuff. All those agencies, they don't just magically come out of nowhere. Like they would shut down if the government actually shut down. And so one reason for why next month's inflations readings might be a little skewed is if we actually don't have the data to be able to even figure it out. And so that's one of those other really controversial things that we got to see if some of that stuff gets figured out at the end of the day. All right, let me pull this up in regards to core PCE so we can do a little bit more analysis on that. And then we will go from there. Overall, markets are very nice in the pre-markets. Bitcoin just under 27,000. And the market seems to like the PCE results that we got a lot more than what the market liked the CPI, which was at last August. Ty Gordon says, so the shutdown will actually happen coincidentally when that data is literally more important than ever. Fascinating and not at all intentional. And that's a really good point as well. If the shutdown does happen, which seems like in the next 2 days, the shutdown is definitely happening. It will happen on a month where October CPI and core PCE is going to quite literally determine the Fed's rate hike or not, right? Like that October CPI and PCE is incredibly, incredibly important. If we don't, know it, then it's just not going to be good at the end of the day. So, the government shutdown, not good at that for that reason as well. Here's a chart I just wanted to share on PCE, and then we'll move on from inflation. If you're just tuning in, PCE is down month over month and year over year, which is a really good thing for markets. So as you can see right here, this is what core personal consumption expenditures looked like over the past 5 years. As you can see in 2020, it went to negative 1.5, around that range. That means that we were really headed towards deflation. I mean, like that's why we pumped $7 trillion into the economy. Maybe it was too much. Probably should have been like 3 or 4 trillion, not 7 trillion. But that's why, the Federal Reserve was so afraid that we were going to have deflation. And then it ticked up really badly. As you can see, this was like top of 2021. We were at 6.5% on core PCE. Like this is the index that matters the most to the Federal Reserve. And it has come down pretty nicely. The Fed inflation target, as you can see, is right there at 2. Look at where we are right now. we are headed very close to that level. Obviously, over 6 months, we're a little bit higher. Change from a year ago, it's a little bit higher than that Fed inflation target, but we are definitely getting closer and closer if you annualize the rate over the past 3 months, which is why the markets are excited. And now, if you have been paying attention to a lot of the stuff that's been going on with inflation, you kind of knew this was going to happen. A lot of things around inflation are starting to come down, which is obviously very bullish for markets. And this whole higher for longer narrative might be true, but it also might be a lot of BS. And if it's a lot of BS, then that means that there's going to be a potential for more rate cuts to be coming in the future. Let's do some quick updates on where we are on the charts, and then we'll move on to the next segment. We got a lot of other stuff to talk about today. We had Nike earnings. We had some new developments in the world of Twitter. And we have a lot of new things in regards to what's going on with Meta. On top of that, there is a other development in regards to the government shutdown and our debt financing that we got an update from last night from the House of Representatives. So we'll get into all that in just a little bit. All right, so Palantir is 1607. The pre-market's up 1.87%. Tesla doing well at 250. This was a stock that was at 238 just a couple of days ago. We're seeing a very unique market bounce. A couple of theories for why the market bounced yesterday. So the 10-year, the yield on the 10-year hit its highest level from 2007. All right, we were at 4.6%. At the same time, everyone thought yesterday that equities were going to go back to the 200-day moving average on the S&P 500 at around 420. Why? Because when yields go up on bonds, it's obviously bad for equities. Why would you put your money in an equity if you can get more on a yield? So the yield going up means the bond would have to, or what means the stocks would have to eventually capitulate to a bottom. And if the yields kept going up, then we would have to keep finding a bottom on stocks. The problem is yesterday the market rallied. Like if you look at this chart right here, we have a nice green candle from 422 all the way up to 428 yesterday, and it was just a smooth reversal of what was going on. One small reason could have been that when bond yields went down just for like a couple of minutes yesterday, that's when high frequency trading algorithms took millions and billions of dollars and threw it into stocks because that was a sign to them to go long equities, and long equities might mean a couple, minutes for them, but long equities because bond yields were dropping. That was kind of the dog whistle. So like, all right, let's invest in stocks. Now the problem was that might have been a glitch in terms of bond yields because they rose right back up to that 2007 high within a couple of minutes, but all that money had just inflowed into stocks. So one of the arguments for why stocks ripped higher yesterday, even though bond yields were ripping higher yesterday, and let me pull up the bond yields right now, is because it might have just been a technical glitch in terms of frequency trading algorithms. The other side to that narrative is that the market was oversold and that, the market tended to recognize that we were massively oversold as we were hitting the 200-day moving average. And this is the hard part about trying to time the market. For the past 2 weeks, it has been nonstop. And I'm, reading the Wall Street Journal, CNBC every single day. Look, there are so many catalysts for the market to decline. There's this auto worker strike, which, by the way, is not getting any better. Like you thought there was going to be an update today. Nope, it's getting even worse. There's rising oil prices. There's all the stuff going on in Ukraine, yada, yada, yada. It's just like, it's sell your stocks. And if you sold all those stocks, a lot of them are right back to where they were, if not even higher than when you sold. And so it's really hard to time this stuff. And that is one of the reasons why it's in general, it's not the easiest in the world to do a lot of this timing. So, let's look at here. The U.S. 10-year Treasury back at 4.5, which is really good. This is another reason stocks are going up this morning. As you can see, there's a nice little decline from there at the left-hand part of my screen. Yesterday, we hit 4.62 at the top, and right now we are 4.534. If this yield can come back down to 4%, so down 500 basis points, which I don't think would happen overnight. I think it would take maybe a month or 2 months to see that happen. Then equities are going to do really well going into the end of the year. And in order for them to do really well, not only does this core PCE data that we got today have to continue on a trajectory downward, but the bond yields have to go downward. And the reason they go downward is because eventually, inflation seems to be falling off a cliff. And so investors are like, well, let's put our money back into equities. So that's kind of the reason why we're seeing the rally we're seeing today. And, not really a rally, but definitely a lot more momentum on stocks than we saw over the past week and quite frankly, 2 weeks. And that's why we're seeing a little bit more gains currently in the stock market. And so it's not bad. PCE information, it's not bad at all. Inflation is not doing too bad. And we're getting a lot better understanding of why inflation is, why inflation is coming down, and why the market is tending to give it a little bit of a, not 50 basis points, not 500. Correct. I meant 50 basis points. So that would be going from 4.5 to 4. If it went down 500 basis points, that would be like almost COVID levels if that happened. June says, we got used to lower interest rates. Historically, interest rates are not that high right now. I think we are here to stay for quite a while. I agree. Let me be very clear. I do not think the Fed is cutting 75 basis points or 100 basis points, anything. Like, I don't think that's happening anytime soon at all. I do think the idea that we're going to get another one is a little tough for me to see when we get this inflation data that we're seeing this morning with core PCE. Could it happen? Sure. Does the Fed hawks that want to come on CNBC, like Neil Kashari came on 2 days ago saying we need another one, is he going to tout his case? Sure. Are they actually going to do it? I don't know. I don't think that's going to happen. I think it's going to be a tough argument to be able to say. If you are just coming in here, the NHS patient data deal for Palantir has been delayed until mid-October. We are not going to find out until mid-October if it's going to happen. However, the NHS has launched a $2 million or £2 million deal to be able to engage with patients and essentially advertises them what the federated data platform is so that they don't opt out of sharing their data, because you need the data to be able to make sure the platform works. My, quick hypothesis this morning is that the reason they're launching that campaign is because they want to make sure people aren't scared of Palantir, because they gave Palantir the deal, and eventually they're going to announce that deal for Palantir. But we did get an update. Mid-October will be the new time where we all try to figure out if the NHS ended up giving this deal to Palantir. All right. I want to transition now to Google and Bill Ackman. Google, I think, is a pretty interesting stock in the market in regards to AI. We're seeing Google up a little bit in the pre-markets. Google up 55% year to date. Bill Ackman right now at 134 in the pre-markets had some really interesting thoughts to say around Google yesterday at the CNBC conference. Let's listen to him talk about this a little bit, and then we'll go from there.
And AI, and the stock sold off to 15 times earnings for one of the greatest businesses in the world. And we did a fair bit of work, but Google's been almost a decade. They bought DeepMind, huge, spending billions and billions of dollars on AI. It's a company known for hiring great engineers, and you could certainly presume they were at a pretty good place on AI. But they're, again, very different from a startup. They took a much more cautious launch approach, and then kind of fumbled an early demonstration, made people think they were behind, and Microsoft and ChatGPT would sort of, if you will, OpenAI would eat their lunch, and it led to a very mispriced stock. And then we've bought more in the 120s. It's our second largest investment.
Alphabet.
Yeah.
Some would suggest that, and it was said on
again, let me just reiterate that if you're interested in Alphabet and you care at all about Bill Ackman, it's second largest investment, 4.1% of the portfolio, billions of dollars into the company. The only reason I stress this is because I give Bill Ackman a little bit more weight when he buys a stock in terms of analyzing it. Obviously, all these hedge fund managers, they all make mistakes and stuff, right? Like, it's whatever. But Bill Ackman only has 8 stocks. Cathie has like 17,000, right? Bill has 8. So when he picks one, he tends to be with that for many years. He got Chipotle at $400, and that has turned out really well. Lowe's, Hilton, those are the companies he has. The one mistake he made was Netflix. He got out of that really quickly, but he tends to hold for a very long time.
this stage earlier today by somebody who sold Alphabet when the ChatGPT and OpenAI thing came out.
So we bought from them, so we should thank them. Yes.
That the ball was fumbled and recovered by the other team who ran for a touchdown and then piled on with other touchdowns. And now Alphabet may not be able to recover the leadership role that it had.
Yeah, I think that's...
DeepMind is a perfect example of Alphabet having this in-house and still fumbling the ball.
I would say they fumbled the PR around the ball. But I think they've subsequently demonstrated publicly that they are integrating AI in all of their various products. Obviously, the most obvious example is search. And they are, I think, their Bard is certainly neck and neck with ChatGPT. And we think they're, if you think about the enormous amounts of access to data that they have by virtue of the various, everything from search to the various products they offer to their customers, email and otherwise, data and the ability to legally extract and train on data is a really important competitive advantage. They also have designed their own chips, access to the cloud, access to the processing power is critical. So they've got many, many competitive advantages, and I think it's in some ways, in an integrated fashion, it gives them an enormous advantage. They will be a dominant player in AI for the very, very long term, we would expect.
I joked at
All right, so there you go. Some quick thoughts from Google on Bill Ackman. He got in the position at $94 a share. Right now, Google is at 134. I am invested in Google, so let me just disclose that. Look, I like Google as well, and the reason I think Bill Ackman got into it is because of a mispricing and valuation. So I'm getting more into it because I see them as some of the leaders in AI, specifically around cloud computing for AI, right? So their whole model around TPUs, that's what's getting me excited. Obviously, YouTube's growth is amazing. That's where I'm getting excited around Google. They had a partnership with Uber the other day of implementing chatbots into Uber. Like, it seems like from a consumer perspective, even if they don't win enterprise, from like a enterprise AI models, but more so around enterprise compute, they're going to win on the consumer end because Google's AI is going to be implemented into everything. So that's the bull case for me. But the reason Bill Ackman got into it is because ChatGPT was supposedly supposed to be stealing their lunch. And the problem was that ChatGPT didn't steal anybody's lunch. It gave the perception as if it was stealing its lunch. And that's where Google sold off to trade at 15 times earnings, which is just absolutely ridiculous for one of the most phenomenal companies in the world. That is Google. So as a result of that, you saw a decent amount of people starting to get in and be more excited around Google. Right now, I think Google is at 23 times earnings. If I'm not incorrect about that, I might be a little bit wrong. Let me check this right here. So I still think decently cheap if you believe in the long-term AI narrative. Obviously, very hard for a double on Google, given it's a $1.72 trillion company. It's not the easiest thing in the world for them to double. PE ratio is 28. So he bought it at 15. So he bought it when the ratio was half. And it was because of this perception that ChatGPT was going to kill them, and ChatGPT didn't kill them at all. In fact, ChatGPT is probably never going to kill Google. Google generative AI search is amazing. It'll take some users away and some usage away, but it's not killing Google search writ large. So that entire narrative, Google kind of didn't really respond to correctly, which actually presented an amazing opportunity for investors because Google, investors weren't convinced that Google was going to get rid of this issue in regards to ChatGPT, and so the stock sold off, and then people bought it, and Google ended up solving the issue. And so that's what we're seeing in regards to Google and some benefits there. Let's move on to Nike. We got 13 minutes until the market opens. Nike, a consumer staple, $12.94 billion in revenue. Market expected 12.98. Basically, not beat on revenue, but hit on revenue, right? They didn't miss on revenue. It was a slight miss, but it was really nothing. And EPS, Street expected 75 cents a share. Nike got a 94 cents a share. So we saw a nice 8% pop on Nike. Nike's been one of the worst stocks in the Dow Jones over the past year. So let's get some updates on what it means for Nike and the state of the consumer.
The company came out with earnings of 94 cents a share. That beat expectations of just 75 cents. Revenue fell a little short of expectations and gross margin slipped a bit, but it still came in above estimates. One closely watched metric was China sales, which grew by 5% year over year. That slightly missed expectations, but the CEO, John Donahoe, said that he feels good about the market in China and Nike's position there. And he highlighted the return of sports there as a driver of sales. Nike did maintain its full year guidance of revenue growth in the mid-single digits. So check it out. That stock is up by better than 8% this morning.
Meantime, new this morning, the Wall Street Journal.
Nike did their thing. Nike absolutely did their thing. Now, the reason I wanted to play that is because what does it mean for the state of the consumer? One of the things we've been seeing in regards to the more bearish case for why we're going into a recession, and that's one more video I want to play in a couple seconds for why Bank of America definitely sees a recession going into mid-2024, is really because the state of the consumer is in a tough situation. Student loans are starting. Consumers have racking credit debt. They're not going to be able to pay that stuff off. Personal loans have 20% interest rates on them. Auto loans have like 7-8% interest rate. It's just impossible to imagine the consumer weathering through the storm. And what we see in Nike's earning, even though some metrics are down around gross margins and certain sales in certain areas are down, even though China sales were up 5% year over year, the consumer is strong. They're buying Nike products. They're buying Lululemon products. They're going to stores and they're buying stuff. Now, I went to a Kohl's yesterday. If you don't know what Kohl's is, it's kind of like just a clothing retailer in the United States. It's relatively big. And I saw a Nike hoodie. And for a second, I thought, you know what? It looks like a really nice Nike hoodie. Then I looked at the price. Shit was $80. I was like, you know what? $80 for a hoodie makes me want to like cry. I'm like, I cannot live with myself buying a hoodie for $80. Even though it looked really good, the Nike logo was nice. It was big, nice. Like, it just looked like a good hoodie. I didn't buy it. So I'm one of the consumers that would never buy an $80 hoodie, and you can't count on me to support the economy. But there's enough people in the United States that don't care, and they will buy that hoodie. And so thank you to those people because you're keeping Nike afloat and our economy. All right, here's why Société Générale's Subhadra Rajappa believes the United States will go into recession mid-2024.
Now to talk rates. Subhadra Rajappa, head of U.S. rate strategy at Société Générale. And I didn't see you nodding, but I read your notes, and I've felt some implicit nodding. There are big supply issues and not necessarily receptive buyers on the other side of a lot of debt issuance coming up.
Absolutely. I think the supply-demand dynamics are definitely as skewed as they've ever been in at least the last decade or so. Yes, foreigners have been stepping back. China is not buying nearly as much, and then Japan is also not buying, as much. In fact, they've been selling treasuries. But really, the elephant in the room for me is the Fed. They've been unwinding their balance sheet, and it's QT. They've been unwinding the balance sheet at the rate of 100 billion, per month. And then you have banks and financial institutions also reducing their portfolios after the regional banking crisis. Banks have been reducing their treasury holdings. They have a lot of unrealized losses in their portfolio.
Yeah.
So they really can't grow their portfolio in a meaningful way. So there's a lot of reliance on real money accounts in the U.S., as well as money market funds and hedge funds. So that's really where all the money is going, as opposed to international buyers or the Fed.
And it's kind of, we've talked about it and pointed it out.
She's basically making the argument that quantitative tightening is not going to get any better, especially given what the Fed is doing with their balance sheet. And that's why we're likely to see a little bit more of a probability for a recession.
Because it's not, you don't think about it necessarily. It's kind of a vicious cycle, because the higher rates are going, the more things cost, which makes inflation stay high, which makes rates stay high, at least stay high, or might even go higher from here because of those things. It kind of feeds back on itself, doesn't it?
The way I look at it is the higher interest rates go, the more the chances are something else will break, right? Right now you're seeing, overseas BTP bond spreads are widening. Emerging markets are going to come under pressure as yields rise. Our equity strategists are thinking at 5% as the threshold for, when equities might start coming under pressure. So, the borrowing costs in general are going up. The mortgage market is under a lot of stress.
So the soft landing idea doesn't really work.
Yeah, I mean, it's going to be tough to imagine we absolutely have a chance to get a soft landing. It's so funny. Some of these terms that have been phrased after you cover this for so long, it's like soft landing, transitory, all this stuff that becomes like second nature in terms of how you think of this stuff. We will see if it ends up happening. And if it does happen, I will give all the praise in the world to J Powell. But if it doesn't happen, which is more likely than not, then we're going to have to deal with some of the ramifications of that. So that's what we see in the world of Nike, some recession analysis. Bill Ackman, Google, Macro. If you're just joining again, Palantir did not get the NHS deal yet. It is announced. It will be announced in mid-October. That's the update we got on that. And we will see when that deal comes in, hopefully in mid-October. And if it's delayed from more mid-October, then it's just an annoying waiting game. I think the deal is already done. I think the NHS already knows who the deal is going to. I do not think they're still deciding. I think now it's a question of figuring out how to roll it out. I absolutely think they know who the deal's going to. If you're going to announce it in 15 days, it's not like you're going to make your mind up in 15 days. You made up your mind. Now it's just a question of how you bring it out to the world. And we'll see how they do that. S&P 500, 431 in the pre-markets, 431.5, up 0.75%. Again, yesterday was a red day that turned really green. And now the S&P, I think, is down about 6% or 7% from the month of September versus almost being down 10% at one point, which is not too bad. SoFi, nice big mover in the pre-market, $7.95, 5 cents away from reclaiming that $8 territory. Right now in the pre-markets. Coinbase at 75.16, 76.61. We're about to play Brian Armstrong in a second and just see his thoughts on regulation. Palantir $16.13 in the pre-markets. Yes, the macro is up. Yes, everything is green. The only difference is Palantir is up particularly green for the entire week, right? It's not just a question of Palantir being green for the day. This week, Palantir stock is up, if you include what's going on today, about 12% in a week, which is a lot. I mean, that's especially for a high moving name like Palantir. And again, is that retail driven? Maybe. I think it is a bit more institutional driven. And today I actually have a little bit of proof for why it's institutional driven versus retail driven. A lot of times we don't have any proof and we're just guessing and we're trying to figure out, is it retail? Is it institutional? Who's actually doing it? But we got confirmation yesterday of a new fund that loaded up 9.8 million shares of Palantir. There you go. Shout out to Cameron tweeting this. Now we have confirmation that the one fund added a whopping 9.8 million Palantir shares. This was disclosed on September 27th. I don't know if it's a new fund or if it's an old fund, but the point is they disclosed just a couple days ago that they did pick up 9.8 million shares. There was a 12 million share print if you were looking at the chart on September 15th. So one could argue that on that day, that is when we saw this fund decide to load up. On September 15th, we ended at around $15.33. So lower than we are today, but definitely not in the lows of the September 20 to 25th range of around $13.95 to $14. So they did pick up 9.8 million shares, probably in that $15 range. That means there are hedge funds out there that were willing to buy at $15. And what we also saw underneath this post, someone tweeted, Palantir is their top 2 holdings. As of August 31st, Palantir was in the top 2 holdings of this firm that bought 9.8 million shares. It's 4.15% of their portfolio, which is really interesting because there's not, at least I've seen as many funds, investment funds that have Palantir as a top 2 holdings, much less top 10 holdings. The name of the fund is Carolyn Scout Midcap Fund Class A. So if you want to look that up, CSMEX, that is the institution. Don't know anything about these guys, have not heard about them before, but 10 million shares, it seems like they find some value in Palantir, and that's why they bought it. This is their fund performance right here. Yeah, I'll have to go a little bit more deeper into them, but Palantir top 2 holding for them. Seems like they're excited for that company as well. Austin, hello. Thank you all for being here. All right. Farina says, explain ontology for me in 30 seconds. You might have heard Sham Sankar talking about ontology yesterday. I'm going to play a clip from him a little bit later after the market open of what he was talking about on the ARC podcast, because he said something very interesting. Ontology is very simple. It's taking all your data in an organization, putting it into one cohesive system via software. Essentially, it's called an ontology, right? This is what Palantir's core Foundry product is. And with an understanding of your data, you can do stuff. So for example, if YouTube wanted to know their daily metrics, how many videos are get posted, what videos do well on what day, what time do people watch certain videos, but there's literally an infinite amount of questions you could ask about the library that is YouTube. YouTube needs an ontology of their data. They need to know all that data in one place, with coming from a variety of resources. And that's just on the tech side. Imagine, they want to figure out on the advertising side. And then you have all these, there's again, infinite amounts of data. And what Sean was talking about on the podcast yesterday is the number of sources to include data are getting bigger and the amount of data is getting larger, which means you need an ontology to capture all of that. The philosophical etymology of the word ontology is the state of being. It was used in Kantian ethics back in the 1800s. Ontology is just like the state of being, like a chair. The state of being of the chair, the ontology of the chair is for me to sit on it. That is the purpose of the chair. For a organization, the ontology of your data gives you an understanding of how do you use this data to make a decision and to take action. And that is where Palantir specializes in helping organizations across the world. So ontology just helps you understand your data. 1612 for Palantir. We got about a minute until the market opens. 80 on Disney. We got Disney getting a little bit more green, did not fall below that 80 level, even though it was close this week. Amazon at 128 in the pre-markets. It is up. The FTX lawsuit is not hurting them as much as it was a couple days ago. Netflix 380 in the pre-markets. Arc Innovation at 39.82. So we're seeing a lot of green in the pre-markets, pretty much all across the market. Financials are up. NVIDIA, look at that. NVIDIA, wow. 438 on NVIDIA. NVIDIA was at 412 just a couple of days ago. Nice rebound on NVIDIA. Harris says, Amit, how are you? Hello from New Zealand. Hello, Harris. Ironically, I was watching a video yesterday about a tennis player in New Zealand. So shout out to New Zealand. New Zealand is awesome. I don't know if there's a big tennis culture there, but New Zealand, I want to visit one day. And Australia. I got to visit Australia one day as well. Robinhood at 984 in the pre-markets. Amazing. TFC, baby. 2842. Let's go. TFC regionals doing well. Let's see if this sells off, or let's see if it keeps going. It's a Friday morning. Thank you all for joining me from the bottom of my heart. 9:30 a.m. September 29th. Let's end out the last trading day of Q3. The market is now open. Wake your ass up. Here we go. S&P 500, 431, up 0.74%. Nice rebound from 422 a couple days ago. NASDAQ, 13,335. It was getting close to that 12,000 range. It was like 13,040 yesterday. Nice little rebound on the NASDAQ, opening up 130 points higher. Palantir opens up 2% higher, $16.08 on Palantir. Again, if you're just joining, core PCE data came in lower month over month and year over year. It's the best core PCE data we've had since September 2021. That's why we're seeing some of these gains and momentum in the market as it opens. Tesla 249, nice pop from 238 a couple of days ago. Coinbase at 76, SLG at 37, Instacart at 30.28, still below its IPO price, but higher from 29 yesterday. Disney, $80.73. SoFi breaks through $8. We got out of the $7 jail. We are back to $8. Now it could sell off. A lot of these stocks could easily sell off, but at least for now, up 4% as the market opens. Look at that bad boy run. $8.14. Look at that. I clicked on SoFi at 8.05. It's at 8.14. Not bad at all on SoFi. So if you held on to some of that SoFi and you doubled down, I did buy the dip. Not a lot, about like 20, 30 shares, I think at 740, 750. So it didn't buy a ton of shares, but SoFi not doing too bad. Amazon at 127, Nike at 97, nice 8% pop. Amazon needed this for the year. Amazon has done horribly, or sorry, not Amazon. Nike has done horribly. So nice little earnings beat yesterday by about 20 cents. They beat on EPS. Revenue came in pretty much in line. China sales up 5% year over year. Gross margins down a little bit, but Nike up 8%. The market thinks that the consumer will continue to buy Nike products. Arc Innovation at 39.91. Netflix at 380. Google 133, up 0.9% or 0.2%. It got to 128, I think, yesterday. So nice rebound for Google at 133. Enphase 123. Nice rebound for Enphase as well. Enphase hit 116 yesterday, hit a new 52-week low now at 123. Microsoft at 317. Square is up 2%, but still in that $45 range. Square has not been able to get out of some of these levels, but Square is stuck in that $45 range. Austin says, I'm glad I got some SoFi at 760. Not bad at all. Yeah, look, a lot of the market is green. JP Morgan is up. PayPal is up. PayPal 58.98. Nice 2% pop on PayPal. DNA, Ginkgo Bioworks, $1.70. Zoom 69. Target 110. Meta 306. Meta got to 284 just 2 days ago. So the market immediately has switched their mind on Meta. Meta now at a $789 billion market cap. It is the cheapest by market cap of all the big tech companies. Let me look at Meta's PE real quick. PE is 36. Google's PE is 28. So Google is technically cheaper than Meta if you think PE and is a better barometer of determining valuation supports, but Meta's market cap is, almost $1 trillion lower than Google. So Meta is at an $800 billion market cap. PayPal 59. What else we got? Robinhood 997. Look at that. Robinhood probably inching towards that $10 range. Robinhood got stuck below. I also did buy the Robinhood dip. I bought option debit spreads. I bought 7 of them at $46. My average was 55 and they dropped to 46. So I loaded up 7 more of those. Right now I'm looking at it on my Robinhood. It's back to 55 cents. So still not above my average on those, but I did buy the dip on those. Robinhood up 3.18%. Not bad. Apple at 171. Apple hit 168 yesterday. So nice to see Apple doing up. Rocket Labs up about 5%. QQQ at 361, up from 351 yesterday. Truist up 1%. Zion is up 2%. Key Group up 2.3%. KRE, Regional Banking Fund, up 1% as well. It's a green market, folks. Wow, look at Palantir. Wow. Look at Palantir. Oh my. $16.38, up 3.8%. Okay, so if we look at Palantir stock now for the past 5 days, the stock is officially up 16.5%. Look, a 16% move, think about this in context. The S&P historically has averaged 8 to 9%. You're getting 16% in 5 days. Now, I know if you're used to investing in high growth tech companies and stocks, you're used to these things. They're very volatile, right? Things go up and down 20, 30% in a week. I get it. But for a pretty bad macro and a pretty tough September on the last trading day for Palantir to end the week up 16%, just on rumors, by the way. We didn't get the NHS deal. It seems like that speculation of rumors is what's leading to this rally. I mean, we did get $250 million from the Army, so that is nice. But again, that when you annualize that, it's not like a massive boost in terms of our revenue. It's like $21 million a quarter, which is great, but the market expected us to be able to get those types of deals. But still, we're running. Look at that. Look at that right there. 1653. Oh my gosh. Oh my. That was fast. It was at 1638. I said 2 words about the NHS deal. It's at 1650. Wow. Or I was saying we got 250 million from the Army. 60. Wow. Look at that sucker run. Not bad. Congrats to shareholders today. 1640. Not bad at all. Wow. Look at that. Whoo, this is the fun part of investing in high growth tech stocks. Now, look, not to be naive here, but on the downside, it sucks, right? When we saw it go to 1394, it was not cool. But look, under 14, people have been asking me, Amit, are you buying? Under 14, I'm a buyer. And I will continue to stay with that mentality. Under 14, I like the stock. And I've bought the stock over the past month many times under 14. Not a ton of capital because I don't have that much capital liquid, but I did buy 10, 15 shares here and there, put some more in my Roth IRA. Under 14, I like 1640, not bad. Now, here's my honest thoughts. Does this get sold off? I think there's a chance people take their profits, and I don't blame you if you're taking your profits at all. I don't blame you. You know, it is what it is. It has to. I mean, look, you might be afraid of what's going to happen in Q4 and take your profits. The problem is some of these covered calls that people had for 16 this week might be getting called away, and some people might be forced to sell their shares at around 16 a pop because of those covered calls. And so that's why doing covered calls on these tech stocks are not my forte, because you never know. You might be like, all right, Palantir was at 14 at the start of the week, right? Where was it at? Yeah, let me just give you guys some context here. And then we're going to play a clip from Shyam Sankar, who went on a podcast yesterday that said something very interesting that maybe has the market excited about Palantir. Gum says Monday sell-off. It might be a Monday sell-off as well. I mean, you don't know, but we'll see. So here we look at this 5 days. So on September 25th, which was 4 days ago, the stock was at 1403. If you sold covered calls, which for those that don't know what a covered call is, you're basically saying, hey, market, you can take my shares if Palantir reaches a certain strike price. You are betting against the market that the shares of the company will not reach that strike price. So $16 was a pretty safe, even $15 most likely was to some people probably pretty safe this week of a strike price. So if you set a covered call for $16, that means if the stock was ending on Friday or whatever expiration date you picked at $16 or above, your shares would be sold at $16, which means you will make a profit if you had shares at an average below $16 and you got a premium for lending your shares out to the market for selling the covered call, right? You got a premium for that. That's the whole reason people do it. But if the stock goes above 16, your shares are done. So imagine you have an $8 average and you have a $16 covered call strike and the stock ends at 16.01 today. Those, and you put up 4,000 shares or whatever it is, you make the profits from 8 to 16, but you don't get your stock at $8 anymore. Now you have to rebuy it at 16. This is why covered calls are scary on high growth tech companies. They're a great strategy to collect options premium and make income, but sometimes you just don't know. No one's a genius. No one knows when the stock is going to rally. Like, who could have predicted in the worst month of September, the last week, when bond yields are at their highest since 2007, the market would ignore it and just rally and Palantir would be up 17%. No one could have expected that. That's why it's very tough to do it. It's very, very, very tough to do it. Josh says you can always roll the covered calls. Yes, you can. I mean, you can also roll the covered calls as well. You guys can do that. Yes, you can roll the covered calls. Not everyone knows how to do that as well. You guys are assuming a lot of people know how to roll covered calls. Bro, you guys think a lot of people are like TJ, and I love TJ. But most people that are doing options, I'm telling you, because I was one of these people, they don't know what the fuck they're doing. They know a little bit about the strategy. They do it, and then you either lose your money on the cash trade put or the covered call. Like, you guys are talking about more advanced strategies about rolling off the calls. Yeah, you can do that. You can do that. But there's also a lot of people that are not going to do that, right? For the people in the chat that are more advanced, you will do that and you'll make money, but other people will not. Amit, Hood has new regulatory fees per contract on options. Is that new? I don't know if that's new. If Robinhood does have regulatory fees on contracts, I don't think it's the biggest deal in the world. At the end of the day, you're still going to do your options on Robinhood. You're not going to leave Robinhood. So if anything, if that makes Robinhood, if I have to pay a couple cents for my contract, I don't really care. If I have to pay some dollars, it's going to be annoying. So I would want to know how much the price is, and I'll look that up in a second as I play this video, and I'll try to get some news on that. But I'm assuming they're having to do it if it's regulatory based. It's not because they want to do it; it's because of regulation. So I wouldn't imagine that they need to try to do that. Alice says, "I love Amit." Alice, I love you too. Thank you for being here. Alice is from my favorite country in the world, Australia. The reason I love Australia is, honestly, this is going to sound embarrassing, but I found this girl on TikTok who's just very beautiful, and she's from Australia, and I want to marry her one day. Yeah, again, I know it's going to sound I think I'm in love with her already, so I'm going to go to Australia one day and find her, and try to court her to be my soulmate. And that's why I'm infatuated with Australia. I know nothing else about Australia other than that girl that I'm in love with in my mind is there. All right, so here's what Sham said about the word incumbents yesterday, which I thought was really interesting, because he basically said, hey, we are the guys that you should be afraid of when it comes to technology. Let me just pull this up right here. This is what the interview with Cathie. By the way, you know, I was reacting to the interview yesterday with audio. Apparently, we had a video version, and I didn't know that. We could have been watching the video the whole time, so we have the video version. Here's what Cathie asked Sham about when it comes to incumbents getting power from AI and
infrastructure.
Here's how Sham responds. It's a really, really interesting response. Palantir right now at $16.45. Here we go.
You're mentioning the incumbents, which would limit the efficiency or the effectiveness. There is controversy out there on Microsoft. Is it still so legacy bound that there's going to be something to trip it up for that reason? It's been moving pretty well from what I can see, but just that I'm just throwing that out as an example.
Yeah, if there are, I don't see them yet. I think I wouldn't bet against them as an example with Microsoft, certainly. And I think that in general, the infrastructure is probably not going to be rate limiting. Of course, everyone's having a hard time getting at GPUs, but I also think the amount of movement in open source, particularly from Meta with Llama 2, is creating a whole surface area around which the models are not going to be the constraint.
I guess another way to frame or just react to Cathie's question, there's the infrastructure for deploying and training and doing whatever you want to do with the AI, but there's also the ability to connect it to the rest of your organization and really integrate it rather than just make a standalone kind of new AI product. It's easy to build modern and there's probably some organizations that are better positioned to move fast, and the incumbents being the large tech companies probably can, but there are other incumbents in other industries that probably are not as well positioned.
That's a great point. And I think it goes back to what I was saying earlier about how robust are your backend APIs and how type safe is your data model. Type safety is your friend with LLMs. It really limits to give you some intuition for that. You could say, like, in some sense, English is like the least type safe language. The number of sentences I can make that are grammatically correct but garbage is probably larger than the space of correct sentences, right? So there's a lot of the risk of hallucination becomes very high. The more type safe your data model is, actually, the more you can safely rely on the LLM
company.
So I had to skip around a little bit, but this is the actual part I'm looking for. This 30 seconds is the part I was looking for. It got a little confusing, the transcript, but this is the part I want people to hear.
In the world. Clearly, you have said that an incumbent like Microsoft is, in a very good position. So maybe just if you could end on that. When he says that, he says it with such conviction. And part of it is we've heard that Palantir understands the way technology is going to be in 5 to 10 years. Is it something in that next 5 to 10 years that is going to be the aha moment for people who just do not understand this story?
Well, in many ways, I think we think of ourselves as incumbents. So I should kind of clarify that in a sense, where what we're talking about is, do you own the pixels that make the decisions and operations today? Or do you have the ability and the distribution to own those pixels and deliver on them? So the fact that within a week we can be working with net new customers to get production level use cases and capture their imagination, I think what we feel, the reason we are so excited is we feel like we have the elegant integration between the human thought, the LLM, and the algorithmic reasoning that's required to actually capture the market.
That right there was the most profound part of that interview. Let's open up the chart again. Palantir now at 1650. Why was that profound? Because early in the interview, he was like, Microsoft is the incumbent. They're going to win when it comes to AI. And when he said that, Cathie was a little confused. She was like, wait a second, what about you guys? Are you going to win when it comes to AI? Like, if you're not the incumbent, what happens? And Sham was like, oh, wait a second. I didn't say this correctly. we are the incumbents technologically. In a week, we are working with net new customers, implementing algorithmic reasoning along with the science of LLMs, along with the art of making LLMs good, and we're putting it out into the marketplace. So he kind of ends the podcast on saying, no, Microsoft's going to win because they're Microsoft. But make no mistake about it, technologically, the reason we're going to capture the market, as he says at the end, which is what Alex Karp continues to say, is because they have the moat of an incumbent without being as big of a company as Google or Microsoft. Which, when you think of who has IL level 6 security clearance, it's Amazon, Microsoft, trillion-dollar companies, and then Palantir, this little $30 billion company that also has that security clearance. Who's at the White House summit? It's Elon, Sundar Pichai, Satya Nadella, Zuckerberg, trillion-dollar companies, and then Palantir, this $30 billion company. So I kind of believe Sean when he says from a tech perspective, we are an incumbent. Now our go-to-market just has to exploit the nature of our technology already being ready to go to market. And that's how we're going to capture the market. That's how we're going to win. And that's what we're seeing right now with Palantir getting here to around $16.57 and people being excited potentially for the stock. Now, the question is, does this sell off? I think that is the big question to everyone. 16.57 up 5% on the day. I wouldn't be surprised if it sells off because it's, people are probably sitting on some pretty big gains, but I don't know. 1660. There you go. We're at the 1660 range right now. Let's see. I mean, look, the last time this happened, Palantir really ran. I remember this was happening back in July or June. Palantir ran pretty aggressively. It's one of those stocks when it gets the momentum to the upside, it gets the momentum. I mean, people come in, people buy the stock, they pile in. So let's see. Let's see if that can continue. Good morning from the Bay Area. June Kim, thank you for being here. Good morning for being here as well. Victoria says, taking profits at 16.5, be back when it dips below 14 again. Look, that's fair. I can't blame you. I know there's a lot of people that would say, the reason I haven't done that, and, look at that, we're at 16.70. That's pretty insane. The reason I've never sold, even when it was at 21 bucks, people are at 21, admit, why didn't you sell? And like, look, I was sitting on some pretty hefty gains at 21 bucks or $20, whatever it got to. I didn't sell because my philosophy is pretty simple. I actually want to hold this company for a long time. If I'm going to trade a company, then, I'll do it with my options. If I'm going to buy an actual stock, I'm going to be with it. And like, maybe it would have been smart to sell at 20 and capture my gains and then reload back at 13. But like, I get it. I understand that. Like, obviously, logically, in hindsight, all that makes sense. The problem is Palantir is one of those companies I just don't want to play that game with. I want to let it ride out. I really, really do. I want to have thousands and thousands of shares in the next 10 years and look at, and you know why it's a little bit more personal for me? Because my parents never invested. They never knew anything about investing. They were immigrants to America. They got here, they had to fight for everything. They didn't have time to learn about the stock market. So in the context of me learning about the stock market, one of the things I don't want to do is take a cheap shortcut. And I think options are a cheap shortcut, but they're a calculated, leveraged, cheap shortcut that hopefully you're doing. It's a gamble. Hopefully it's a meaningful, calculated gamble. When it comes to making real wealth, Palantir now at 16.77, you got to hold for the long term. I mean, it's just, you got to hold for the long term. And I want to look at this stock at $200 a share in 2030, 2032, having thousands of shares, knowing that fucking 24 years old, this kid was on the internet trying to figure out how to make some money, and he found this company and he made 2,000 videos about it to build his conviction, and he held the damn stock. Palantir just touched $16.80, 16.79. Right now we're seeing it up 6.5%. Let's see what's happening on Twitter. Let's see what's happening on Twitter. If you are not on X, please make sure to follow me on X. The timeline's probably going crazy right now. I'm putting this in the chat. Please, 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 if you're not on X, follow me on that platform. I would love to have you on that platform. And if you haven't used it and you're interested in Palantir, it's a great platform to find content about Palantir. There's a thriving community there. So I would definitely recommend joining and checking it out. All right. Let's see what's going on. So here we go. A secretive U.S. tech firm pushes toward the heart of you. Wow. Hold on. Is this, oh my God. Is this the New York Times? Oh my, hold on. Is this the New York Times Palantir secretive? Let me Google that. Is this has to be the New York Times. This looks like the New York Times font. Does anyone have the article? Does anyone have the article? Please put it in the chat. Does anyone have the article? Holy crap. Oh my God. It's the New York Times. They did a hit piece. They did a hit piece on Palantir. Wow. Wow. They did a piece. Oh my goodness. Yo, what? They did a piece. They did a P, and they're asking me to sign up. They better get the freak out of here asking me to sign up. Let me open up incognito. Oh my goodness. I can already, okay, I haven't read it, but the title, a secretive US tech firm pushes towards the heart of UK. Wow. Did they really just do a piece on them? This is what you get when you log on Twitter. You end up finding this stuff out. Yeah, it looks like they did a piece. Okay, I'm not going to read it right now. I'll read a little bit later because obviously it'll take some time to read, but wow. So another reason, look, this is actually a big development. Another reason we may have the delay is because of this New York Times piece. I'm dead serious about this. The New York Times, like it or not, I know a lot of us don't read it here and think they're like a dead, media company. They have a lot of reach. They get 600 million unique visits per month to their website. When they publish an article, it spreads. One of the reasons the NHS might have delayed giving it to Palantir, I dead serious, is because they knew this article was coming out. Why? Because the article, the writers probably contacted the NHS and was like, hey, can we get a quote from you for an upcoming article that's coming out on September 29th, the day after? Literally, if the contract was awarded yesterday and this Times article was dropping the day after, it might have been in response to the contract the day before. And so the New York Times might have timed it. And that's why the NHS was like, you know what? Let's wait. Let's let the article die out a little bit before we put out the article. Wow. This is why it feels like we're in a movie in regards to, my computer screen just dropped over a little bit. This is why it feels like we're in a movie in regards to Palantir and covering this company. Oh my goodness. If you're just joining, I just hopped on Twitter for a second. Here's the headline. A secretive US tech firm pushes towards the heart of UK healthcare. I haven't read it, but it just feels like it's going to be a hit piece. It really does. It seems like something they took months to be able to come up with as an article, and they're putting it out there. Could you imagine if they quoted me, or if they quoted one of my my YouTube videos? That'd be super cool if they actually did that. That'd be interesting. Let's see. Okay, so that's a new update. We will find out what's going on with that New York Times article. I genuinely believe that part of the reason why the contract is delayed is because the NHS wanted to deal with the media scrutiny from the New York Times and go from a little bit and try to figure it out and try to see, how they navigate it from there. And they also launched a $2 million or £2 million advertising campaign to educate consumers around patient data. That also might be in response to some of this propaganda that's going on across the UK, and obviously from the New York Times, that's also happening. So here, I tweeted a picture of Palantir at 1656. Here's some of the responses. We got wow, beast mode, 1670. My $17 January calls looking tastier. Yo, let me know in the chat if you had 15, 16, 17, or 20 short-term calls. Short-term meaning from anywhere from November until February 2024. Let me know if you have those calls, because they're probably printing. Palantir at 1674 right now. The New York Times is after Palantir right now. Wow, man, I cannot believe we got a hit piece on the New York Times. Absolutely insane. Absolutely crazy. That's wild. All right, so I guess we got I did not expect that. Did not expect that. All right, so we will see. We will see. Man, that was tough. Let me go back to the stock real quick. Let me pull up on Robinhood, and then we'll get into some other stuff right here. Let me see some of the comments. $16 calls up 147%. Goodness gracious. Goodness, not bad. $16 calls for what strike are those, Garcia? Are those this week? Are you being a degenerate and gambling this week, or are those a little bit later than this week? Wow, the New York Times. I can't wait to read that one, man. That one's going to be an interesting one, because we know how the New York Times rolls. I mean, it's more likely than not. So let me just pull this up real quick. I wonder how they conclude. I wonder if they honestly did any level of due diligence around, hey, is Palantir really, this company that's going to steal your data? I really wonder. Palantir now at 1680. I'm just pulling it up in a second. I wonder if they really did any due diligence on how, is Palantir that company that's like trying to steal everything from you? I would really love to know that. There you go. Palantir, $16.79. Because if they conclude that Palantir is an evil spy tech company, they did not do their research. And I know that because I've studied the company for 2 years. I know this company better than most journalists would ever want to know this company. And I know the tech inside of the company better than most journalists. I've watched by the way, the keynote they put out yesterday by one of the generals at their software for government conference, phenomenal. absolutely phenomenal. It talks about Operation Warp Speed and how Palantir was there in milliseconds to help them with vaccine distribution. And whether you care about vaccines politically or not, the point is how Palantir was integrated to be able to help solve core problems. Absolutely amazing keynote. I doubt the people that wrote this article actually watched all those keynotes and actually understand everything that's going on with Palantir. And so if they conclude that Palantir is an evil company trying to steal the UK's patient data, it's just such a ridiculous conclusion that it would, again, make me lose my respect for the New York Times. I'll fucking tweet at these guys who wrote the article. I'll find the authors and I'll tweet at them. I'll be like, yo, do you guys want to do a live debate, live podcast? Because they're not going to do it because they're scared and they know that they're wrong. But we'll see. Mainstream media has done a million hit pieces on Tesla and flat out lied on them. Yeah, that's true. I mean, that's a good point to bring up. Mainstream media in regards to, and see, this is the other point I was bringing up in the beginning of the market open. I kind of think Palantir has to go through this if it wants to become, a very big company. Every big company has to go through a lot of bullshit, especially in regards to the media to win. Amazon, Google, Facebook, Tesla, they all got to go through it. I don't see Snowflake going through any BS. Databricks is not going, like, these guys are like, sitting in their ivory towers, just like having massive stock-based compensation for sales reps, apparently, because their stock-based compensation is going up while Palantir is going down. Like, these guys aren't going through any drama. And I just feel there's like something subconscious around the concept of a company having to go through a lot of shit and drama and having executioners on that company deal with it and move on to the other side to be rewarded with phenomenal shareholder gains. And so I think Palantir is one of those companies. I really do. I think Palantir is one of those companies. Palantir at 1670. SoFi is at $8.25 right now. Congrats to SoFi shareholders as well, holding strong. SoFi, $8.23, up 5.8%. Wow, not bad. Let me pull up some of the other guys. Let me pull up Webull and go through some of the other things in the market. If you're just joining, NHS deal has not been declared. It will be declared mid-October. They delayed the deal, so we will know soon. And a New York Times article has come out on Palantir that I've not read yet, but found out about a couple of minutes ago. And so we'll see there. Let's look at some of this other stuff. Also in the chat, what is on your watch list or has been on your watch list for the past couple of days? Let me know, because then I'll pull up those stocks and I'll see how they're doing. Put some tickers that have been on your watch list that you've been really thinking about, whether they're conventional tickers or not. And we can look at some of their price action today, because everything is green. And I want to see if some of the stuff you guys are looking at is also green today. Tesla, 252, 2.57%. Congrats to shareholders. 238. It was at the lows on Monday or Tuesday, so not bad for Tesla. Coinbase, 76.80. SLG, 37. Instacart, 30.53. MicroStrategy, 331. SoFi, 822, up 5.7%. Google, 134.52. Not bad at all for Google. Enphase at 122. Not bad at all for Enphase. Okay, let's look at some of these tickers. Rivian, we got Rivian. Rivian, for some reason on Twitter, people love Rivian. People really think this is like a pseudo Tesla or something. Like, I don't know. I haven't gone that deep into it, but people like Rivian. Rivian right now up 4% on the day. Amazing. $22 billion market cap. I don't know as much about Rivian as I should. I have to go deeper into them. I don't know anything about their PE or their profitability. I think they're profitable. Let me know in the chat. I'm pretty sure they're profitable. But I did know that Amazon and Ford had stakes in them, and now they don't have those stakes, to my understanding. That's the most I know about Rivian. But Rivian doing very good today. What else we have? NIO. Let's take a look at NIO. NIO, this is the first stock I ever bought on the stock market. In fact, the first stock I ever bought on the stock market. $9. If I had held that stock when I bought it, I still would be up 900%. Because I bought the sucker in Macroeconomics 101 for $1.22. I was literally in my macro class on Robinhood, not paying attention. No, sorry, it wasn't macro. It was business strategy. It was because macro was junior year. This was senior year. And business strategy was like truly a waste of time. Macro was a waste of time because he wasn't actually explaining stuff. They were just lecturing about formulas, which is not really understanding macro. Business strategy was a really big waste of time because there's like 17,000 YouTube videos you can watch on business strategy. But I was buying Robinhood at $1.22. Sorry, not Robinhood. I was buying NIO on Robinhood for $1.22. So NIO will always have a place in my heart. But NIO now at $9.09. PayPal, let's take a look at PayPal. How is PayPal doing? NIO also up nicely on the day at 2%. PayPal, 58, up 1%. PayPal, not a big mover, but definitely doing better than it looked like it was falling at 5.55 at one point. So not too bad. Where'd you go to school? I went to Rutgers Business School. Rivian is not profitable. Okay. Did not know that. Rivian is. I did see Rivians in New Jersey. I've seen a ton of Rivians in New Jersey as well. So I've seen them there. Palantir now at 1666. ADYEY. This is a international company, up 5% on the day, $7.42. This stock, I believe, it was at $34 back in 2021 at the bubble. There was a nice red candle right there. This is when all of fintech was collapsing, went from 18 to 6. Look, that red candle right there makes me really interested because I know Tanner, our good friend on SoFi Weekly, is also interested in the stock. Maybe we need to do a podcast with him and just have him pull out the bull thesis. I have no idea what this company does. I know it's in the payment space, but it is looking like it's been depressed in terms of stock action. Now we got to know if the numbers support it and if there's any juice to squeeze for Adyen. What else we got? Bros. Okay, Dutch Bros. This has been a stock that some people have been interested in. Dutch Bros, $23. This one has continuously had red candles. I know this one has 28, so this one, it's up 2% on the day, but it has seen some red candles. I'm not interested in buying any coffee companies, to be honest. I never cared much about them. I want to invest in tech. So if you guys like Dutch Bros, that's cool. I just, not that interesting to me. I did watch a documentary yesterday when I was at the gym about a Red Bull and how they became prominent, and it gave me a better insight into understanding Celsius. Let's go to Celsius real quick. I think the biggest problem with Celsius right now, and I'll be honest, even though I know Celsius was $4 in 2020, it's $174. It's probably the best returning stock of the past 10 years at least, right? Done an amazing job. The problem with Celsius is I don't know if they have a real brand. And this is really top of the head analysis. This is not really deep due diligence, but Red Bull became a longevity type of brand because if you go to the story of how Red Bull built their brand, I mean, they sponsored a guy falling like 50,000 feet from space into planet Earth back in 2012. They really did work on their brand. Celsius doesn't have a brand. I've never correlated Celsius with like risk taking or energy or, going for the win or any type of aspirational sort of dialectic, as Alex Karp likes to use, which is just like a paradigm of values. It's just an energy drink, I guess, that tastes good, which maybe is enough to keep it growing. Because right now, again, if you're buying it at 174, you're buying it at a $13 billion market cap, and you're buying it after 100x, literally, or 80x, whatever. So if you're going to buy it, you're going to buy it for the next probably 2x, 3x that it can do. Again, it went from $4 to 174. So please remember, if you're buying this right now, it's got to really still grow. And I don't know if they have the brand longevity to still be able to grow. I don't know if they can do that. They're the Fit energy drink. That's their brand. I don't know. I don't know if that's enough of a consumer brand to be excited about. Maybe. But that's my biggest concern with Celsius. S&P at 431 right now, 431.67. Palantir still holding on to that $16 range. We have not sold off from 1670 or from 1650ish. Still 1670. We are still there at the $1670 range. It seems like it wants to run to 17. Don't know if it will run to 17. Definitely seems like it wants to. But we will see if it ends up happening. 1675 right now on Palantir still. Not bad morning. Let's see if we end the market open and then the shit just collapses. It would be so sad. We got to do the market open forever to like keep it up. Snow was at 142 yesterday's open, now at 54. Yeah, this is why, again, these covered calls on tech stocks, unless you're rolling the covered calls, it's very hard because some of those shares will get called away. Snowflake, again, when the market booms, the Snowflake booms, even though I think Snowflake is pretty overvalued at 142 or 154, even with their growth rate, trading double at Palantir's valuation and not doing that much more revenue than Palantir, another 500 million. If it'll go up as the market goes up as well. Adoro Clean Tech, ACT. Okay, let's look at this ticker. ACT. This one is down 0.29%. I know nothing about this company. So you're going to have to link me an article to learn a little bit more about that company. Oscar, thank you for the super chat. $5. NHS deal is delayed. That is correct. We will know back in mid-October. We will know. My birthday is October 27th. So hopefully it's a nice little birthday gift before I turn 26 years of age to learn if we got the NHS deal. We will see. Amit, do you own ELF shares? I don't. I know this is a big stock for Jeremy. Also, announcement, Jeremy will be on Finance Junkies on Sunday, 7 p.m. Jeremy will be on Finance Junkies on 7 p.m. I'm going to leave the link in the chat to the Finance Junkies channel. Please make sure you subscribe. It is a podcast I do every single day, 5 days a week with my three friends. So please sure you check it out. We're going to ask him about ELF because he's up a lot of money on ELF. So ELF let me get a better chart. What is ELF year to date? I think it's up like 70% year to date. I think Jeremy's made like $700,000 or some shit on it. He's made a lot of money. on this one. Took a loss in TTCF. That was a big L, but he made some decent money with ELF. Year to date, wow, 100%. See, and this is why, for all the shit people give Jeremy, his ability to find stuff like this is why I respect him, because it's not easy to find stuff like this, man. You got to and some stuff you're going to get wrong, some stuff you're going to get right. It's investing, but to find stuff like this, to know that Elf Beauty was going to be a winner, not easy. Not easy at all. Elf, not bad. 104% on the last 6 months, up 40%. 5 years, up. Wow. 800%. I think he's been holding this for the past year or two. He's been buying it pretty aggressively. Max return, 300%. Past 5 years, about 800 if you got into some of the lows. So during COVID, it went to $8. And right now it's at 118. Yeah, so we'll ask him. I don't own these shares, but we'll ask him. We'll get his thoughts on that as well. What else do we got? All right, so let's pull this chart up one more time, and then I want to get into this. I think I'm gonna have to do a separate article, guys, or a separate video on the New York Times article, because I know I'm gonna have to really read it and go through it. But man, it definitely does feel like it's a little bit of a hit piece. Palantir right now it's 1667, so we're seeing a little bit of a sell off just here, just a little bit up, still up 5%. And now the power hour is going to be really important, because if this bad boy can run up to 1680 around 2-3 p.m., we might see it end off really nicely. Now, usually Fridays there tends to be a sell off. Historically, when Monday through Thursday is trash, Fridays we don't see a sell off. But we might see a sell-off towards the end of the day if, people want to take their profits, or it might just rally up a little bit further into the day. That might happen as well. Matt says, please discuss AAP, Advanced Auto Parts. I've heard of this company. I've shopped at this company before. Advanced Auto Parts right now up 2% on the day. Market cap of $3 billion. Okay, so it's a small cap. It's definitely a small cap. It was a high of 230 in 2022. So it's down pretty significantly at 53. $3 billion market cap. You know what? Hold on. I have this software that I should actually be using, because I pay $10 a month for it. I pay the $10 to support my guy who made the software. Visualstocks.com. Let's just pull this up real quick and do AAP and see what it looks like at a glance. So Visual with a Z, stocks.com. If you guys want to check it out, not sponsored or anything, just one of my friends. I have to log in now. Aren't I logged in? I should be logged in by now. Oh, I used the wrong email. Hold on. There we go. That should work. That's not working either. All right. So I must have cleared my browser history. I got to pull it up later. We'll take a look at that another time. But Advanced Auto Parts, that's really interesting. I got to look at the revenue, but the market cap is definitely a small cap, and it looks like it's fallen down pretty aggressively. So we'll see where it goes from there. Let me do one last one. ACT in the chat as well. Let me see if that one pulls up. Sometimes Webull is not the best with searching some of these stocks, so it's not the easiest to find them. Yeah, it's not showing up that well. So I'll take a look at it another time. Sometimes it's really hard to get these things to pull up. So we'll look at that one another time. One last look at Palantir, 1670, still retaining that 5% gain on 1670. Not bad at all. And let's take a look at PayPal, 58.83, S&P 500 at 431, Tesla 253, SoFi. Where are we at on SoFi? SoFi at $8.13, up 4.68%. All right, it's a green day, folks. Palantir, very, very big runner on today, up almost 20% on the week, around 16, 17%, 5.8%. Let's put it in the chat. Do you think Palantir maintains this level, or do you think it sells off by the end of the day? That'll do the last question, then we'll end out the market open. Do you think Palantir maintains this level, or does it sell off at the end of the day? Doug says AAP is the poster child for buybacks. They're getting crushed by high used car prices, inflation, auto worker strikes. That's interesting, especially if they're doing a lot of buybacks, but the auto worker strikes are messing with them. The update on the auto worker strikes is that it's getting worse. So for anyone who wants to know, it's not getting any better. We didn't do a segment on it today because it's getting worse, and there's no negotiations yet. So hopefully next week we see negotiations. I think our government will shut down in 2 days in the United States. So that's going to be a big headwind for all stocks, including Palantir next week. And we'll end up seeing what happens. Mateo, thank you for being here, man. Have a good weekend. You too as well, Mateo. We got to get dinner in New York soon, either next week or in October. We got to find a time in New York. Let's meet up and let's get dinner and let's talk about life. Imnop says it's all in the hands of the government shutdown. Probably maintains above 16. Sell off Monday. Sell off. Small sell off. Sell off. All right. So a lot of you are getting bearish. You think it's going to sell off? You think it's bearish? Zach says 1630. I think I'll put out a prediction, even though it's definitely going to be wrong. I think we end today on Palantir. I think we end 1645. 1645. I think we end 1645. That's it. That's my number. I feel like Dave Portnoy in the One Bite Pizza review. Yo, I'm getting addicted to those videos. I was watching it last night. I was like, it's so cool the way he takes one bite of the pizza. He gives it a number. He's like 4.5, 7.8. I'm feeling 7.6. I'm feeling 8.5. I'm feeling 1645. That's what I'm feeling. 1645. That's what I'm feeling. 1712 ER Faisal says 7. You guys are being aggressive with 17. That's aggressive. 1645. I think it's kind of reasonable, even though I think that's probably gonna be wrong. But we'll see what happens. Amit, you ever been to Connecticut? Yes, I've been to Yale. I've been to New Haven a bunch of times. So I have definitely been to Connecticut a bunch of times around the Northeast. All right, that's it for me. Thank you all for being here. We'll have Palantir Weekly tonight, 11 p.m. Cancel your dates. Cancel whatever dinner you're going to. Cancel the movies because you got to be in for Palantir Weekly. It was one of the most exciting weeks as Palantir shareholders. This might be a 2-hour episode. We've got a lot to discuss. And the fact that the stock is up with all the stuff that happened this week, $250 million deal, NHS contract, New York Times hit piece, $60 million deal from the NIH. Stock is up 16%. Shyam Sankar, Cathie Wood. There's just so much going on in the world of Palantir, and it's been the most fun ride to cover all this stuff. So I hope you guys enjoy and join me there tonight, 11 p.m. And we'll have SoFi Weekly as well. A lot of news on SoFi at 10 p.m. Eastern Standard Time as well. That's it. Thank you all for joining. I appreciate it. The market open has been amazing this week. Really enjoyed covering everything for you guys, and I'll be back 8:45 a.m. on Monday morning to cover the stock market. Thank you, everybody. Enjoy your weekend. I will see you later tonight. Bye-bye.